Hello traders, this is Ken Calhoun from TradeMastery.com with one of my most important strategies ever developed called an arbitrage play to take advantage of overnight gaps in ETFs and ETNs. For example, I bought TVIX into the close on the 28th, added to it on the way up, and then sold it up at 44.7. This is an exact opposite chart of, or close to exact opposite chart of instruments like SVXY or TQQQs. They go up when the market goes up. TVIX goes up when the market goes down. And by playing both of them against each other for overnight holds that you then scale into, makes for a very intelligent trading strategy. So we're going to cover that in this video coming right up. Anyway, I'm Ken Calhoun from TradingTheOpen.com. Be sure to try out my live room where I trade live real money trading account in front of everybody 5 days a week with 100% transparency. I show you all my wins, stops, and break-evens as we go through the market each morning. And more importantly, I explain why the trades are being put on. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this, agree to not make actual trades. Here's a screen cap of the winning trade just from yesterday. I sold cleverly right near the exact top, which was good. I was in 150. I sold 100 at the 44.7 and the remaining 50 at the 44.4 and locked in good profits on that trade. So, it's P&L proof of trading and selling near the exact top. I didn't get the exact top at 45, but 44.7 was pretty good. One of my finer moments. But anyway, let's take a look at this play and how it can help you in your trades. So one thing that we want to take advantage of in the ETFs or ETNs, as exchange traded funds or exchange traded notes, like TVIX and others, is the fact that oftentimes they trade with mirror image chart patterns. How do we exploit that to our advantage as active traders? I teach how in my live trading room, but I'll just quickly introduce the concept here. The play is as follows. Well, first of all, the relationship is as follows. Like I say, when TVIX, notice please the big spike up and then the big drop down. Instruments like SVXY does the exact opposite pattern. How do we profit from that knowledge? How do we trade this correctly? And what I like to do is actually, instead of SVXY, even though not an exact mirror image chart, I like trading the TQQQ versus the TVIX. And that's what I've been doing lately, because when one gaps up, the other gaps down. And what I like about these is that they're priced in the $40 a share range. They're almost but not quite exactly the same share price. So let's take a look at how here's how the setup works. What I do is I will buy just 50 shares of each of these instruments into the close. And what I did day before yesterday, I bought here for, I think it was 40.60 or so is my cost basis on the trade. That gapped in my favor. I scaled into it on the way up and then sold the first sign of trouble to lock in a profit. Now on the other side, the TQQQs, I bought 50 shares here. It gapped against me. I had a 48.80. Missed it by that much, to quote Get Smart. But anyway, that was the right place to stop out of this trade, and so I stopped out and took a small loss in this. But that was more than offset by a much triple size profit in the TVIX that I sold into the spike. Okay, so similarly, today I'm long 50 shares TVIX that I bought on a bounce right before the closing bell yesterday afternoon. Hooray, it's in the money by about 2 points. So that's about $100 up already this morning. Thank you, TVIX. But I'm also long 50 shares TQQQs. Okay, and that's down by about a point or so. So I'm already ahead, but we'll see where things go. I'm recording this here just after 7 a.m. East Coast time, as you can see in the ticker tape here. Anyway, that's the play. That's the main setup or the concept. It's my most important trading concept or technique that I've developed, and I want to work out the kinks and figure out how to make it extremely consistent. And you're certainly welcome to join me at www.tradingtheopen.com as one of my live room members. We're at multi-year all-time high subscription levels because traders are finding this is a much more intelligent strategy to do things like that, in addition to momentum runners. Like I was trading ALQA yesterday on the bounce. I think I bought, was it 308? anyway, it ran up nicely. Instruments like Abercrombie and Fitch ran up nicely. TNXP. So we do now cover the small caps like these that are in the under $10 share range, as well as the higher priced ones that I've traded the last 20 years, or 19 years I should say, like ANF. But that ARB plays, so that's a reason to join the live room, as we cover the strongest charts. But more importantly than that, what we don't do is just trade thousands of shares of some small cap stock and gamble and hope for the best and take big stops when we're wrong and big wins when we're right. I want more consistency, and this is a good hedging approach, kind of like hedging with options. Well, unlike that, I like having instant price action gratification. I can trade within 30 to 50 minutes, or an hour or two, or overnight in this case. So anyway, that's the play. Step number 1, find 2 ETFs or 2 ETNs that run directionally opposite to each other that are priced about the same. Like, for example, LABD goes like that, LABU goes like this, right? Now these two are kind of second choice because they don't have as much volatility, but they do have opposite relationships. There's many of them out there, and what we want to do is look for those. There's the SQQQ, which does not have enough range in general for intraday trading, and look at yesterday versus the TQQQ. Okay, but personally, I'm trading the TVIX because it's superior volatility for day trades versus the TQQQ. And all you do is put on 50 shares. What I do is I put on 50 shares, of course, and experiment with different share size depending on your risk tolerance and experience level and so forth. But I like to start off small. The whole reason for doing this activity, because it's not a wash, close to a wash though, right? It starts off as a wash. But like what I did successfully is I'll scale into the one, I'll add to the trade. I added a total of 100 shares to the 50 share overnight hold and sold it all up near the top. So that was a really good trade setup, and I made a profit on that, a nice profit on that. But the point is, that's just to get the party started, to have some unrealized P&L in your favor, so you're playing with the house's money. The subsequent scale in is where the value is added to this trading strategy. You scale into the winner, you take a relatively small stop on the one that didn't work out, okay? And so that way you've got a lopsided in your favor arbitrage approach where you're scaling into the winning trade and scaling out of the one that's going against you. So anyway, love to hear your thoughts or your comments. Feel free to post those. And for more, we're going to cover this daily in my live trading room at tradingtheopen.com. Bye for now, and best wishes for success in your trades.